The accounts will be very, very simple. It's only the computations involved is what we told. The accounting will be very simple, monotonous entry, purchase entry, interest due, installment payment, keeps on going. Provided all our customers are very good customers, they do make prompt payments, they won't commit default. But that is not possible, there will be exception. There may be few customers who does not make payment, who will not make the payment in time. So whenever there is default in hire purchase transaction, the vendor will take back the goods. So in case of default by the hire purchaser in making payment, the vendor taking back the goods is called repossession. Shall we? So what is the accounting treatment for repossession is what we would like to know. Everybody? So let us understand the accounting treatment for repossession. Shall we? Everybody? In the books of hire purchaser, there are two accounts, asset account and hire vendor account. Please respond. And these things, should it show same value or different values? Different values, because once the asset is recorded, once a liability is recorded, asset will get reduced based on depreciation. The liability will be reduced based on the interest and payments. And these need not be related. In fact, they will not be related. It will be based on the useful life of the asset. And this will be based on the actual terms of the agreement. If I agreed for payment in 3 years, doesn't mean that I should use asset for 3 years. I may use asset for 10 years. Please respond. So thereby the values may be different. Right? So imagine one day the asset which was taken on hire purchase showing a value of 80,000. Liability, so it is showing by balance brought down, it is showing 50,000. Please respond. On this date, the hire vendor repossessing the asset because you are not repaying 50,000. It's now we are waiting for 1 or 2 months. This has already become due and you are not paying the amount. Everybody, since you are not paying the amount, we are repossessing the asset back. Who is repossessing? Sorry, our asset is gone. When the asset is gone from the hire purchaser, from the hire, liability also reduced. Respond. Can the hire vendor take this asset and then ask still 50,000 give? Not possible. Then hire purchaser will take kerchief. So please understand that asset is showing 80,000, liability is showing 50,000. So when the hire vendor takes the asset back, which is called dash, then asset is eliminated from the hire purchaser as well as liability is also to be eliminated. Very simple entry which will be made. You should be, once you know the concept, it becomes so simple. Asset is there in the book showing dash balance. 80,000 over there, dash balance. Debit balance. Liability showing. Now these two goes out. These two simply remove. What is the entry? Debit. Debit. Liability. Hire vendor. To remove this. To. Understood? Please respond. So debit. To asset. So that way you make entry. Hire vendor debit. Respond. How much? To asset 80,000. Are you following this? Please respond. Sir, he will take only asset to the extent of 50,000. It is a single asset. Can I cut the 3/4 and take? Not possible. I take the asset back. Respond. Everybody. Now we just find out that when this is happening, our asset is going out to the extent of, our liability reduces only to the extent of, so we are incurring a loss here and we should bear this loss on repossession. How much? Which will be charged to P&L account. That will be charged to P&L. So entry for repossession, simple. With that entry, the topic comes to an end. We'll do the problem and we will discuss other problems and give it to you. Correct? The last 15 and 16 are only study material problems. So thereby we will gift that to you because it is exactly the problem like question number 5. It's a much simpler than lower level of question number 5. So question number 5 is so comprehensive. We would like to do only question number 5 and 15 and 16 gift to you. Study material solution you will refer. You will not again get back to me because it's simple, straightforward question. Understood? So with that only we will winding up. Shall we proceed? Everybody? Pakka? Okay. And tomorrow onwards this material need not be brought in. Tomorrow's class onwards. You should not bring in a overnight. Now listen. So there will be entry for repossession. Higher vendor debit. Loss on repossession debit. To asset 80,000. Everybody? Yes, sir. Now listen carefully. Sometimes when the repossession take place, not necessary that this asset should be taken at 80. And now actually the higher purchaser taking this only at 50,000. Correct, Appa? From the viewpoint of higher purchaser, the asset is taken only at 50,000 because for him there is a receivable of. So from the viewpoint of purchaser, it is actually asset to higher purchaser 50,000. From the viewpoint of higher purchaser, what is the entry? Asset to higher purchaser. Asset how much? 50,000 to higher purchaser 50,000. Because whatever receivable he had as 50,000, that he is eliminating. In that place he is bringing an asset, physical asset in his books. Correct? That is how the accounting will be made in the books of higher vendor. Shall we proceed? Now this is the entry in the books of higher. What is the entry? Higher vendor debit. Loss on repossession to asset. Sometimes what higher vendor will do, will come and see the goods, what condition it is in. You committed default, no? Respond. You know that this is going to be, you are all the purchaser, you are all the users of the machinery, you know it is going to be, how you would have used it? Rough and tough, understood? Maybe when I come, that asset is not there. It will be in a sack. Understood? It will be in a bag. So parts and parcel will be there in a bag, sir, your asset. Oh. So I would have given a car on higher purchase basis and that car entire thing in a small bag you will provide. This is your car, sir. Are you following this? So anyway, please understand that. Now what I am telling, the essence you please understand that it is not necessary that it should worth even 50,000. It may worth only 35,000. So thereby higher vendor will come and fix a value for the asset. Imagine it is 40,000. He is fixing a value as 40,000. Please respond. In that case, what is the entry in the books of higher purchaser? Higher vendor debit 40,000. If the asset is taken at only 40,000, then I can reduce the liability only by, which means there is still liability for 10,000 rupees which I have to pay in cash in a future day. Understood? So thereby, if there is a separate value fixed by the higher vendor, then higher vendor debit dash. What is that price? Agreed price. What price? Agreed price. To asset, book value. Asset is always 80,000 to be eliminated. Whatever I have in my books related to asset fully eliminated. Correct? So once again, repossession entry. Higher vendor debit dash price. Now quality, no amounts. Agreed price. Agreed price not given, sir, then liability amount. Agreed price not given, then liability amount. Understood? So once again, debit at agreed price. Credit asset at book value. The difference is profit or loss on repossession. Generally no profit, only loss. Loss on which will be charged to P&L. Understood? This is how you will make a repossession entry. Are you following? What do you mean by repossession? When the purchaser makes default, vendor will take back the goods. Is called in case of repossession, asset goes out, liability reduces. Entry will be liability account debit at agreed value to asset at book value. The difference is profit or loss, which will be transferred to P&L. Evladha point. Shall we? Everybody, based on this, we have one question. We like to quickly complete the question and we will leave. Right? So this question number 5, comprehensive question. Question number 5, page number 89. Anybody? Roll number 89. Okay, very good. So roll number 89. Our friend's name. Ilango. Ilango will read this question for us.
Bombay Roadway Limited purchased 3 trucks costing 1 lakh each from Hindustan Auto Limited on 1st January 2012 on the hire purchase system that allows payment of delivery 25,000 for each truck and balance of the principal amount by 3 equal installments plus interest at 15% per annum to be paid at the end of each year. Bombay Roadways Limited write off 25% depreciation each year on the diminishing balance method. Bombay Roadways Limited paid their installment due on 31st December 2012 and 31st December 2013, but could not pay the final installment. Hindustan Auto Limited repossessed 2 trucks, adjusting values against the amount due. The repossession was done on 1st January 2014 on the basis of 40% depreciation on the diminishing balance method. You are required to write up the ledger account in the books of Bombay Roadways Limited showing the above transaction. So the disclosure of the balances arising from the above in the balance sheet of the Bombay Roadways Limited as on 31st December 2013.
So please listen. 1/1/2011, 31st December 2011 and 31st December 2012. One 2014 only. That's all. Please listen. Let me take it directly for discussion. We'll quickly dispose this of. Bombay Roadways purchased 3 trucks, each costing 1 lakh each. Totally 3 lakhs per. In this, 25% down payment. 25%. How much? Out of 3 lakhs, 75,000 down payment. Balance 2,25,000. This 2,25,000 will be settled equally. Principal will be paid equally is what convey. Correct? So please understand the balance of the principal amount by 3 equal installment plus interest at the rate of. This is the purest form of first problem we have done. First model. Correct? So thereby every time 75,000 principal you pay along with that interest whatever due so far. Correct? Like that you paid first installment. But you could not, first installment on what date? 31st December 2011. Second installment, 31st December 2012. Third installment, 31st December 2013, which you could not. So thereby next day he came and repossessed. No tolerance for even 1 month and all. When you are not paid on 31st December 2013, next day vendor came and repossessed the trucks. Understood? Then he was pleading, Ayyo, sir, our business will be affected. Okay, I will be repossessing 2 trucks, sir. Before that, you pay the balance money. 1 truck I am leaving with you. So, how many trucks were repossessed? 2 trucks. When he repossessed, does he fix any separate value for that? He is fixing the value. Not directly a value is given. He says that the depreciation should be 40%. Correct, Appa? You were charging in your books how much? He comes and see the system and he finds that based on the system, each year you should have depreciated how much? 40%. Respond, Pa. So which means we will take up the agreed value by providing depreciation at for 3 years. That is how we will be considering. For how many trucks? 2 trucks. We will find out the agreed value. Correct, Appa? We will make the repossession entry and with that everything will be over. Everybody. So let us directly make the accounts. First part of the question they are asking you what? Show ledger accounts in the books of. So 2 major accounts we will prepare. Which 2 major accounts? Trucks account and Hindustan Auto Limited account. Shall we? Let us prepare trucks account and Hindustan Auto Limited account. Shall we? Okay. What is the first entry we will be making? Trucks account debit, cash price 3 lakhs, 2 bank 75,000, 2 Hindustan Auto Limited 2,25,000. From this we can proceed. Understood? Now please listen. So we have trucks account and Hindustan Auto Limited account. On 1st of January 2011, on 1/1/2011, trucks account debit to bank to Hindustan Auto Limited. To bank it is 75,000 and 2,25,000. This is the first event transaction. On that date, Hindustan Auto Limited 1/1/2011 buy trucks. How much? 2,25,000. 75,000 immediately paid in cash. So liability is only for how much? Remaining 75 should be written in the bank book, cash account. Correct, Appa? So that we are not preparing. Shall we proceed? So asset comes to the extent of 3 lakhs and there is a liability for how much? 2,25,000. Shall we proceed? At the end of the year, interest becomes due 31st December 2011 by interest at the rate of 15% on what amount? 2,25,000. So it is 33,000. So don't copy, sir. First year alone you watch. Second and third year I will give it to you. Don't worry. By interest 15% on 2,25,000, 33,750. Then we have 31st December 2011 to bank. Please listen. 75,000 principal plus the interest 33,750, which means you are paying how much? 1,08,000. Then to balance carry down 1,50,000. So 75,000 is towards principal and 33,750 interest. That way it is 1,50,000. Everybody? Here in the trucks account, 31st December 2011 by depreciation on 3 lakhs at 25%, 75,000. By balance carry down 2,25,000. Now 1/1/2012 to balance brought down 2,25,000. Like that 1 year over. 1/1/2012 by balance 1,50,000. Like that do for second year and also for third year. Then repossession entry will be made at the end of third year. Repossession will be made in the fourth year, beginning of the fourth year. Third year what happened? Just default. Fourth year only repossession. Understood? So let us, you please make out the second year, third year entry. Quickly take. 31st December by interest 22,500. 31st December 2012 to bank 97,500. 75,000 plus 22,500. 97,500. Everybody? To balance carry down 75,000. So then we have 1/1/2013 by balance 75,000. Here 31st December by depreciation 56,250. By balance carry down 168,750. So 1/1/2013 to balance brought down 168,750. Everybody? 31st December by interest 11,250. 31st December to balance carry down 86,250. Because it was not paid, thereby it is simply carry forward. Then we have 1/1/14 by balance 86,250. Here 31st December by depreciation 42,188. By balance carry down 126. So 1/1/2014. 2 balance brought down. 126,562. I hope you would have completed up to this. Shall we make the repossession entries? So since you are not paid the third installment, next day itself hire vendor comes for repossession. Maybe agreed. 1 day default also, the asset will be repossessed immediately. Maybe the terms may be properly agreed. Everybody. So let us find out the repossession price. Respond. And let us make the repossession entry. Shall we proceed? So there are two values required. One is book value. What is book value? Not this. 126,562. Correct? What is the entry? Once again, can you tell? Asset account debtor laba. Hire vendor debit at agreed price. To asset book value. But these two values we require. Difference is profit or loss. Correct? So thereby let us work out the book value, which is very easy to work out. Working note. Book value of 2 trucks. Sir, book value, why should I find out? It is given in the question. No. 126,562 is the book value for 3 trucks. But I want only book value of 2 trucks. Because only 2 trucks are taken over. Understood? So thereby 126,562 divided by 3 into 2. 84. Now agreed value of 2 trucks will be 2 into 1 lakh is the total cost. Please respond. Into 0.60, 0.60, 0.60. 43,200. So what is it you have done, sir? I am giving 40% depreciation. If I charge 40% depreciation, balance will be 60%. Correct, Abba? Only 2 trucks are repossessed. So 2 lakhs into 60% will give you book value of first year. Into 60% will give you book value of into 60% will give you book value of third year. That is based on 40% depreciation. Please respond. So that is a value at which they are taking over. So this much asset they are taking only for this much. So thereby balance is what? Profit? Loss. 41,175. What is it? Loss on repossession. Now very important part, sir. Don't copy this. Listen carefully. I would like to make the entry. Can you help me out with the entry? Hindustan Auto Limited. 43,000. They says we will reduce the liability only by this much. Balance money you should give 2 trucks. 80. Sorry, loss. Where you will adjust? So I will write provision for loss. 41,175. Is it actual loss or provision for loss? Is it still provision or is it actual? It is actual. Now then why you use provision for loss? Now only most important part. Twist here only. Not very big twist, small twist only. Now listen here. We find that there is a loss 41,175 incurred. Correct? This loss is incurred because of repossession. Because of? So loss is relating to repossession. Repossession is made because of default. Repossession is because of default when committed? Previous year or this year? When repossession was done? This year, that is 2014. Correct, Appa? Loss relating to 14 or 13? You tell correctly. Very fairly you tell the loss is relating to 13 or 14. The loss is actually relating to 13. Because the loss is because of default. Loss is because of default was made in and thereby the loss should be booked in. Thereby it is expected that in the year 2013 itself, once you are committed, you should have created provision for loss. And by debiting this provision for loss, what I am actually doing is I am reversing the provision. I am not creating provision. I am reversing the provision created in which year? 13. The provision to be made in the year 2013, and it shall be adjusted in the previous 2013 P&L and not 2014 P&L. So what I would have done, from 13 P&L I create provision, and that provision will be reversed in the next year. So because of that, what is the advantage, sir? In 14 P&L is not affected. In 14 P&L is not affected. Sir, but we have already completed 13 accounts and all. That time you didn't mention anything about provision. Provision has got nothing to do with these two accounts, sir. From P&L setting aside some amount is called provision. Correct, Appa? So it is presumed that, you are expected to be presumed that you should create in which year? Because the moment default is committed, then you are aware of a loss. Correct? Please respond. So that loss should be provided for. Then some students after this discussion will ask a few doubts. I will share it with you. If you are getting, that also will be resolved. Correct, Abba? 1. Sir, this loss you will know when, sir? How much amount of loss when you will know? Only when the repossession take place. Only you know about the actual amount of. Respond, Ba. At what value higher vendor will take over? Can you predict? Higher vendor will repossess, you know. Respond. Either the repossession is based on the terms of the agreement. Agreement would have provided that it may be taken at 40% depreciation. Respond, ba. Or even otherwise, 31st December 2013 P&L, when it is prepared? 31st December 2013 P&L, when it is prepared, ba. 31st December 2013 midnight, correct? Midnight we will call for accountants meeting. See, night itself we should prepare P&L. Like that we prepare P&L. That may go in January or February of next year. Respond. By the time you know the repossession, by the time you know the actual loss, so that should be booked in 13 or 14. You are not completed 13 accounts. Should be booked in 13. Are you following? So these are all we will be learning through some other accounting standard which is called contingencies and events occurring after the balance sheet. There is a standard like that. Are you following? So through that AS4 we will be understanding, sir, something happened after the, but affects the balance sheet, sir. So then it has to be adjusted in the balance sheet. Are you following? Please respond, ba. So why we understand that? So you, by the time you would have prepared the financial statements of 13, you know the loss. So what is the final conclusion, sir? In 13, you create dash. That will be reversed when the repossession is made. Because of this, dash P&L is not affected. Why I am so particular about this, sir? When I finally make the entry, here I will write P&L, sir. So because of this, what is the major impact? Now, my major impact is part B. Can you understand part B? Show the disclosure of the balances along with the above in the balance sheet of Bombay Roadways Limited as on 31st December 2013. They are not asking on 1/1/14. They are asking. So when you present the 13 balance sheet, you will have asset in the balance sheet. You will have liability in the balance sheet. You also have provision for loss in that balance sheet. You should disclose that provision. That provision gets nullified on which date? 1st January 2014. So by making this entry, provision is created or provision is nullified? Provision is nullified. The provision which was created in 13 P&L. Could you appreciate that? Response. Pakka. Okay. So loss arised in 14, but it relates to 13. So thereby it has to be borne by the P&L of 13. So it is presumed that P&L of 13 will create provision for loss, which gets reversed in the year 14. The ultimate conclusion. I hope everybody understood that. Now we'll post this entry. We'll post this entry here. Asset goes up by Hindustan Auto Limited 43,200. By provision for loss 41,000. By balance carry down 40. 1/1/2000 and next day opening balance 1/1/2014. 14, because this is not something happened at the end of the year. I have not given to the accounting adjustment at the end of 14. I just made the accounting event happened on 1st January 2014 only. Respond pa. I am not going to the end of the year. That is why I am not charging depreciation also. 1/1/14, 42,187. That is just providing accounts up to the repossession date. 1/1/2014. 2 trucks, how much? 43,200. On this day, still you have a liability of 43,050. This is the accounts. Question number 15 is exactly the same trucks problem, like problem without repossession. Question number 16 is with repo, where agreed value not given. Agreed value not given, a full liability will be removed. Understood? Like that, simple 2 questions are there. Study material solution is there. Please take it from the study material. Next class we are starting with bonus issue, one of the topic, small topic pending. After that we will start with partnership part 2, and like that it will be proceeded. Right, Appa? Everybody? So here, can I turn this page? Balance sheet extra. Please don't close. Just last 60 seconds. Balance sheet of. Balance sheet of. Balance sheet of Bombay Roadways Limited asset. I would like to turn this page, or I will just present here. Balance sheet assets. First part, equity and liabilities. Under the shareholders funds, share application money pending allotment, non-current liability. Now we have liability towards Hindustan Auto Limited. Is current liability or non-current liability? Now it is already matured, na sir. The matured liability is current or non-current, my dear? It is current liability. Under current liability, it is Hindustan Auto Limited. Under other, you have 2 items. Other current liability and then short-term provision. Under other current liability, you will show that amount. How much? Amount payable by Hindustan Auto Limited. You should be very careful. It is 86,250. This is asset 31st December 2013. Short-term provision 41,175. Second part, assets. Non-current assets. Fixed assets. Under that you will be showing how much? 1,26,562. See, don't know, compare, sir, balance sheet not tallied and all, it is only an extract. This is balance sheet extract. Relating to this, what and all will come in the assets and liabilities. Are you following this?